Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, Friday's volatile pattern continues into Monday's session and now looking for a further extension into Tuesday as the market whipsaws around the range of 62.80.90 and with the top side seen minor at 63.55. In light of the technical pattern, I do feel that the bulls have potential to take the challenge back to the top side, and if we see a break above 64.45, which is where I've outlined here, should confirm the engulfing candle and therefore put a trajectory up towards 66 cents. As I mentioned, the support is around 62.80.90 and while intact should keep the technicals firm and support the upside call. The euro, well, all eyes will be looking to the ECB's rate decision this Thursday with a highly expected 75 rate hike forecasted. In light of the pattern, we still seem to be contesting this topside level around 99 figure 35, and a close above there would confirm a trajectory to 101 to 103. Keep an eye on the support as the market is now slowly rising. That there is a level from this trend support, that is at 97.85. Firm technicals should keep the market focused on the top side along with the overnight posted hammer. Dollar yen's volatile session ends to a slightly steadier price action today. In light of the pattern though, I'm not ruling out a further down test, even though my objective was reached at 145.60.90. Japan's Ministry of Finance has not confirmed nor denied the intervention after the market plummeted 650 points. In light of the pattern, I am keeping a slight neutral bias, but overall, for those trading, the technicals are heavy, so therefore it does look for a possible down test. Well, the market finally learnt that number 10 Downing Street has a new Prime Minister. Rishi Sunak has now taken the steps to the number one job. Surprisingly, the market didn't really react upon the news and at present still holds to a positive outlook and therefore could see the pound push higher and look towards the region of 114.40.45 to 114.95. Well, after the bulls took a big chunk out of the market from rejecting that 1,621 level, the bears appear to have bitten back after staging a defense around the 1,664 to 66. We are weaker, but keep an eye on this support level at 1,638 as a break there would give further exposure back to 1,621. Until then, we are caught in this boundary of 1620 to 1666. Wrapping up with oil, the market at this stage is somewhat lackluster as it moves sideways just underneath that $85 resistance, or around 85.40.65. While intact, while the technicals remain negative, I do feel that there could be further risk to the downside, and taking out 83.5 would expose $81 a barrel. Any advances to the top side, as I mentioned, 85.40.65 should continue to contain any further rally, but if breached, looks towards 88.25.55. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.